So I'm Sean, I'm from Cose Motor Finance. For those of you who don't know who we are, we work with about 8,000 dealer partners around the UK and Ireland, supporting them on their financial needs. I'm going to be speaking to you about, as we said already, about some sentiments that we're seeing from our dealer partners right now, stock funding and your relationship or your partnership with your financial provider. At the moment, there's no doubt that our industry is one of the leading lights in the UK economy. Last year, we had a turnover of 71.6 billion in our business, which is absolutely huge. We've had month after month and year after year of record registrations, car registrations. And in the last couple of months, or the last few months, we saw a slowdown in new and used vehicles. At Cose Brothers, we're very optimistic about the future. Our model is based on prudent underwriting and working in the markets we operate in, having really, really strong relationships. So our bank is confident about our ability to lend through the cycle, whatever that economic cycle is. So that's how confident we are, or how optimistic we are, but how are our dealers feeling? So on a quarterly basis, we survey our 8,000 dealer partners, and we ask a number of questions. The two questions we'll focus on today are, how confident are you about the business outlook, and how confident are you about your own business outlook for the future? And the results are really, really high. So this is from our last quarter, and the stats are about 2 weeks old. So you can see here, confidence in business outlook for the market, 40% are very confident, 52% fairly confident, given a net confidence figure of 92%. That's really, really high. Lots of optimism coming through about our business in the future, or our market in the future. When we asked our dealers about confidence in their own dealership for the future, the scores are significantly higher, or higher at 97%, with 57% very confident in their own business, and 40% fairly confident in their own business. When we did ask our dealers about what could impact them in the future, no surprises there. Brexit came up, and a possible economic downturn. However, dealers are optimistic because there's more opportunities. There's opportunities to diversify into different stock, etc. We also asked our dealers around what they like to see from a relationship with their finance provider. And the same four areas come up every time we speak to our dealers. The first area is insight. Whether our dealer partners are a 24-court retailer or a multi-site franchise retailer, all our dealers crave insights. They want to know what's happening in the marketplace, both local and nationally, so we can help them make more informed decisions about their business. The second area is finance solutions. We're seeing more and more dealers looking to maximize this secondary area of income. And typically what our dealers are looking for is support on point-of-sale material, whether that is for the digital forecourt or for the physical forecourt. But the second area, and most importantly, is how to position point-of-sale finance in front of the customer. So making sure that that customer is possibly coming in with their own cash, or cash from a bank, and positioning point-of-sale finance so the dealer can maximize that secondary income. The third area that we see is compliance, and this is an area that's getting bigger and bigger and bigger in our business and in our industry. Our dealers want to know how they stay compliant. They need support with FCA applications, maintaining FCA licenses, Gable returns, and something that's coming at us over the next couple of months, which is GDPR. So our dealers want to know how they stay compliant for the sake of their business and for their customers' sake as well. And then the next area is funding. And this isn't just stock funding, as it says there. It's funding in general. So we have dealers that, of course, want support on funding their forecourt, possibly expanding their stock range. But we also have dealers that are looking for different opportunities. They may want to extend into servicing, so they want support with a ramp, finance support with a ramp. They may be moving into new premises or opening up a second premises, so they want funding and a funding support to help them with that. They're looking for a partner to take that burden away from them as well. So they're the four key areas that we see typically coming through from our dealers. That is consistent across every quarterly survey that we do. These four areas come up. The types of dealers that we see then looking for or working with us on funding. Well, the first one is new dealerships. So these are typically dealers that have, people that have been working in the trade and have decided to move out on their own, entrepreneurial individuals, a lot of which are in the room, and set up themselves on their own forecourt. Or indeed individuals that have never worked in the trade but are passionate about the industry and feel that with their entrepreneurial spirit and knowledge, they can make a go. We like all dealerships in Close Brothers Motor Finance, but we really like these dealerships. Typically, we will work with these dealers on about a 50k funding facility, and we will help those dealers grow. We've multiple case studies in Close Brothers where over the last number of years, 10, 15 years, we've helped these dealers grow up into £1 million facilities, which is fantastic to see and fantastic for us. The next area then is dealers that have never had stock funding. So these dealers that are typically funding their own forecourt, whether that's through their own cash flow, bank overdraft facilities, or some other type of investments. They've never worked with a partner like us to finance their forecourt. There is the saying, if it depreciates, finance it. If it appreciates, buy it. And we all know that stock typically depreciates on a daily basis. These dealers are looking for somebody to share the burden with them and take part of that risk. They're looking for a provider to allow them to free up their cash flow back into the business or indeed into another part of their investment portfolio. The next area that we see then is dealers that have multiple stock funding facilities. So great that we can get multiple stock funding facilities and get cash flow into the business. We can see dealers with up to 4 partners at times. However, those partners will have different objectives and will be pulling on the dealer in different ways, which is not great for the dealer because they do feel pulled from pillar to post. These dealers are looking to consolidate. They're looking for one partnership. They're looking for somebody that's aligned with their business objectives, and they're looking to remove the administration burden and use one system. And then the last area we see is dealers that we're seeing coming through a bit all too often right now for our marketplace. And that's where we have a funding provider where their objectives are not aligned with the dealer's objectives. So the dealer's objective obviously is to maximize on profit, have an efficient stock turn, but sometimes those funders do not have the same objectives. So those dealers are looking to get out of that funding partnership that they have and into somebody that has their objectives in mind. So they're the 4 type of dealers that we typically work with. Moving on to what we would recommend them for a partnership. And the teams are pretty similar here as well. So the first part is aligned objectives. I just spoke about it there. Making sure that you have the same objectives as your funding provider is absolutely paramount. Sitting down with that funding provider and asking them how they're going to align to your objectives is key to that relationship. It's fundamental. The next part then is stability and credibility. We know that we're entering into slightly uncertain economic times. There's no doubt about that. We want to remain optimistic, but we also want to have a partner that is stable and credible. We want to make sure that any partner that we're working with, that in the future, if things do get a little bit tight, that charges aren't being increased and then putting a squeeze on the dealership. The next piece then is insights, both market and local. This is a big piece for our dealers already. I've mentioned it a couple of times. A lot of suppliers offer insights into our dealer partners. And our dealers typically grab those insights and decide which of those insights they're going to use to maximize their business and make decisions about the future. And then the second last area is complete transparency. You don't want to be in a situation where you have bank charges coming out of your bank account that you're not aware of. And that's another thing that we're seeing all too often right now. And again, those objectives not being aligned to what the dealer wants to achieve. And lastly, face-to-face support. So in Close Brothers, we're lucky enough to have just over 100 account managers across the UK. We operate across 14 branches around the UK as well, so we've got that local feel. And that face-to-face support is absolutely paramount as well. Our dealers crave that. When we survey them, they want to see us every 2 weeks. That puts a bit of pressure on us, obviously, but that's a really, really good thing because they're getting value from us as a partner in their business. That's it from me. Short and sweet. I hope you took something from that. I hope I've provoked maybe some thoughts in your mind about how you're operating with your current finance partner.